challenge I had is at that point, all of my followers were following me pretty much because I was a pro skateboarder. 14 years being solidified as that, I had a big hurdle to get past. The hate is actually a good example that people love you as well. And so if you're looking at an audience, right, and you don't get any hate, your audience isn't worth anything. They're never gonna act with you. They're never gonna ride with you. They follow you the same way they follow anyone else that they don't care about. I had my identity wrapped into me being a pro skateboarder. I thought and assumed that identity could carry over with my last business. All of it was gone. That is truthfully it really is one of the hardest things I've ever done.
In life, there's a blueprint for everything. There's no need to start over. Hear from industry leaders, those at the top of their fitness journey, and real estate gurus. They tell you exactly how they did it. All you have to do is listen, learn, and execute. This is The Blueprint with Brad Rice.
All right. I am super excited to have this guy in the studio today, Mikey Taylor. Tell you a little bit about Mikey if you don't know who he is. He's a Southern California native. But he built a career in pro skateboarding. And then since then, got into entrepreneurship and now is even on the Thousand Oaks City Council, which is unique.
Right.
But he has a 2-decade journey in skateboarding. He helped to sharpen those skills during skateboarding to help him to co-found St. Archer.
Right.
And that's a brewery that was in San Diego. And subsequently to that, you sold that. So I want to talk a little bit about that too. But Mike really kind of developed a path that led him to what he spends most of his time doing today, which is in his private equity firm called Commune Capital. And while balancing that career and his civic duties, he also has his wife, Jen, and 4 children. And I understand maybe plans for a 5th. So we'll talk a little bit about that too. But basically, Mike, man, what a career you've had so far. And I just want to hear how everything that you had been involved in as a kid has led you to be so influential as an adult. So welcome here.
Thanks for having me. And where did you get that information about a 5th?
Oh,
who said that? Who told you that?
It's out there, man. It's out there.
Sheesh. Pray for me, please. Everybody pray for me.
I heard you're practicing anyway.
Yeah, we do that.
Okay.
Yeah, we do that. All right. How it all began. Like looking back, I kind of recognized some early on personality traits that I think were beneficial in my journey. But when I was young, I had no forecast, or I wasn't some of the people that go, I envisioned all of this and it happened. Not me.
Yeah.
Right? I just was a kid that fell in love with skateboarding, and that mixed with a obsessive and driven type of personality, I got pretty good at it. Yeah. And kind of right around the time of me getting closer to graduating high school, so I was 17, I started getting sponsors, and sponsors wanted to start taking me on trips throughout the world. And so I just thought it was a cool opportunity. The caveat, back then skateboarding was so small that there was no future in being a pro skateboarder. You it was like a fake job almost, right?
But even was that prior then to Tony Hawk's success?
So basically what happened with Tony Hawk is when I entered into basically going down the path of being a pro skateboarder, I was making $800 a month, right?
Yeah.
Probably the average pro was making 30. Okay, so we're not talking dollars.
Okay.
Tony Hawk video game basically landed and hit. And when that happened, it kind of changed our industry in the sense of everybody wanted to now look like a skateboarder without actually being a skateboarder, which meant we had a lot more dollars coming in. And then we all of a sudden started making money. Not like pro basketball money, but you started hearing about pros making over $100,000 a year.
Right.
And it was
that was through sponsorships then.
Through sponsorships.
So you had DC shoes for Mikey,
Yep.
right? You still wear those?
I do not.
Okay.
No, I'm not sure I'll wear a pair of DCs ever again. But
classic. By the way, Micah, who's in the room with us here, he remembers those shoes.
Yes, epic.
So the youth does remember. But,
Yeah.
Yes, but you're talking about through the sponsorships.
Yeah,
That's where you really made
so
money.
through the sponsorships, you make money similar to basically a sales job, right? You have your baseline, And then if you have product that you sell beyond your base, you basically get comped.
Yeah.
Right? So, you might have the potential of making a decent amount of money if you have a product that sells.
Right.
If you don't, you can make a decent amount of money.
So it's similar to affiliate marketing.
Very
really.
similar.
And you're not getting some base amount to pay you and then getting some overrides. It's really based on the sales that you help create.
You do get a base.
Okay.
Average base for a pro skateboarder today, I'd probably put it at like 80 grand a year. Okay. 75 grand a year is your base. So that's comparable to probably a sales position, right?
Sure.
Base on a sales position isn't astronomical, but what you can earn beyond that is pretty high. That's kind of the challenge with skateboarding, is not many people get products of their own that can really do numbers. And so that's probably the average income.
Yeah.
For myself, I was pretty business-minded at a young age. So when I got into skateboarding, it didn't take me long to view my career as my brand. And, what type of verticals could I create? What type of, marketing could I implement that led to more sales on my signature line, which then meant I made a little bit more money. And so that, I think, outlook kind of brought me to the point of wanting to find more than just skateboarding. Like, I love skateboarding. I don't say this meaning like it wasn't enough for me. I loved it. But skateboarding had a timeline that wouldn't get me to the end of my life from an income standpoint, right? My career is going to end around 30.
Yep.
And so I really wanted to figure out what I could create that would take what I was building in skateboarding and go beyond my ability to actually do tricks that are competitive.
Now, would you say that the first endeavor into that was with your skateboard company? Wasn't that called Sovereign?
That came after, actually.
Oh, okay.
Yeah, my first real endeavor in this was starting the brewery.
Okay.
Yeah, the brewery was the first real one.
What did you know about brewing beer? How did you? I'd love to hear, and I'm sure like current skateboarders would love to hear how you made the bridge the gap between skateboarding and starting a brewery company.
My advice for someone selling their home: number 1, do it yourself and save. Number 2, use HomePie.
HomePie makes it easy to buy or sell without an agent. I can list a home in minutes and start receiving offers right away from buyers.
When we discovered that we didn't have to lose $40,000 in agent commission just to upsize to a larger home, it was an obvious choice.
List your home for free at homepie.com. Keep your piece of the pie.
I'd love to hear, and I'm sure like current skateboarders would love to hear how you made the bridge the gap between skateboarding and starting a brewery company.
I knew nothing at all about beer, other than I liked some of it.
Okay.
But from like a brewing, like to actually brew beer, I knew nothing. And even if you were to ask me now, I'm the furthest thing from an expert on brewing beer.
So did you had some money and you had a partner and you were the financial side of it?
No, we did a full-blown business plan.
Okay.
And so like what I learned, I didn't understand this back then, but what I ultimately learned was you don't have to be the expert. You have to be the one with the idea, or you can potentially be the one with the idea, and then you could bring people in to help you create that idea, right? That's all you need to know. And so with the brewery, we had an idea of what we wanted to create. We knew basically we knew what we were going to attempt to do that we thought was going to be our either strategic advantage or differentiating factor, right? And then once we had that, it was like, okay, now how do we create this? So that meant we had to hire a team. We didn't have enough money to hire the team, so we had to go raise money from investors.
Okay.
So we raised capital. We then used that capital to buy our equipment, to hire our original team, and then we were off to the races.
So how much did you raise? Do you remember?
We raised $2.5 million the first round.
Okay.
Which back then, and that's not to say $2.5 million is a lot of money. $2.5 million is a lot of money.
It was even
back
more
then. It was
astronomical.
Probably like $50 million today.
Yeah.
It was huge.
Yeah, the money went a lot further than where we're at today. We're at $6 gallon.
Yeah, and
gas.
I know back then it's like I had no relationships with real investors.
Yeah.
No experience. It was it was friends and family round.
And this was like 2012.
We started working on this in 11. We opened doors in 12.
Yeah. Okay. So you raised money, you had outside investors, and I read somewhere that you sold it for about $35 million. But there were some investors upset that they wanted a longer ride and a bigger number.
We sold for a lot more than. Oh yeah, we sold for a lot more than that.
Okay.
we were
the Googler is wrong.
Yeah, we were just we were a little bit under 100.
Okay,
So
that's a big number.
It was great. Yeah, it was totally great. This is the thing that I've learned now having investors for the last 13 years.
Right.
It's hard to make investors happy always, right? Like when you get money in investors' pockets, we're stoked. When an investment works out and you actually exit, you will get some investors that think you should have gotten a higher return or you shouldn't have sold and you should have continued forward. Right. That's just how it goes.
But you kept the controlling interest then, and that's how you were able to make that decision, or did you have a board you had to convince?
Well, we had a board that myself and my partner were both on. And between him and I, we were able to get to majority on a decision-making body of the board.
Well, that's a big, learning experience at that age to have been able to do that. There's many founders that lose control early and aren't in that kind of position.
Yeah, and there's an element where we kind of lucked out, which was we had good guidance. Without that guidance, we probably would have. And look, we made mistakes. Like there's definitely mistakes we made through that process. But some of the big ones that you hear horror stories on, we were able to avoid only because we had people helping us in the beginning.
Nice.
Yeah,
you had some good advisors.
Yeah.
So it was that win then that enabled you to then look at other things. And how did you then get into real estate?
So I started in real estate before the brewery.
Okay.
My original plan was skateboard, live off nothing, get the money invested, and have that either help me transition or cover me until my career was over. And towards the later half is when I started going through this idea of like I need to start my own companies. So when I was investing in real estate, I was investing in storage units. I was investing in a debt portfolio. Those were the two ones. And on the debt portfolio was lending on commercial. So I was always investing in commercial. When we sold the brewery, I wasn't sure what I was going to do after. I originally thought I was going to do a shoe company, actually. And, I probably had a year after we sold the brewery of me in like discovery mode. What's next? What do I want to start? And the reason I landed on this was by chance, and I don't even think it was truly by chance, but by chance, a phone call I had with a friend. And he was another pro skateboarder, and he knew that I hadn't done anything for a year. I wasn't a pro skateboarder anymore. I didn't own St. Archer anymore. And he was like, how are you doing this? Like, are you stressing? Do you need to get a job? How's the kids? Like, is your wife tripping? And I basically looked at him and went, dude, from a financial standpoint, thankfully, I'm good. I do not need to scramble to figure this out. And then I spent the next 20 minutes trying to tell him how difficult the emotional aspect was in which I was going through.
Sure.
Right? Like, I had my identity wrapped into me being a pro skateboarder. I thought and assumed that identity could carry over with my last business. All of it was gone. And so I was trying to figure out who I was. And as I'm like basically opening up my heart to him, it's just flying right over his head. He does not want to hear it. He's so focused on the financial aspect. Like, how do I do what you did? And I hung up that call, and it was just kind of, I spent time thinking about why he couldn't hear the emotional challenge I was going through, but he was so focused on the financial. And I started kind of reverse engineering my life back to when I was his age and went, why was I in this position today? Like, how did I get to the point where I didn't have to worry about the financial and just had to worry about the emotional?
Yeah.
And really what it was, I had guidance at an early age from somebody that taught me about money, taught me about credit, taught me about budgeting, taught me about asset allocation, and then I put it to work, right? And my aha moment was really, how do I do what he did in my life for others? Yeah. And I went, okay, if the goal is empower through education and have opportunity, what do I want that to look like?
This is really interesting because this really ties in nicely to the whole purpose of this podcast, which is the blueprint. And so you learned the blueprint from a mentor, from advisors, said, here's what you need to do. And you're very fortunate to have that guidance early on. And now you're talking and you're saying, well, this person needs the same thing. Right. I've got the blueprint now. I want to share it. And so did you then go back to him once you kind of had this realization and give him that kind of guidance?
So I did, actually. Okay. But what's fascinating is when I was going through the like, what type of company can I create that people can participate with, right? And I came from a high risk type of business that I had investors come in. It was a startup. We were going to make money if we sold it. If we didn't, probably not. And I love that. Like, I love starting business, but I felt like if I was going to bring, friends, family, and beyond into an investment at scale, I probably wanted to do something with a little bit less risk, more of a risk-adverse return. And I have always loved apartments. Like, multifamily was always my thing. Even though I was investing in storage was a great investment.
Sure.
Cash flow is great. It's cheap in comparison with multifamily to build, but it's a little boring. And I always felt like I wanted to get tapped into things that offered experience. I think that's why building brands was such a desire for me. And I don't know if there's a greater experience than where you live. So that was really kind of why I wanted to do multifamily. When I launched it, the guy who made that call to me, he's one of the first people I told that I was going to do this. And he was one of the original investors.
Yeah, right on.
Yeah.
Okay. So Commune really focuses on multifamily. Storage too, or is that just you do that personally?
Now it's multifamily and storage for the actual company.
Okay. So by the way, I'm in total agreement with you. I love real estate plays. You've got the underlying collateral. We know over time real estate goes up in value. It doesn't matter what snippet of time, with the exception of like the financial crisis and one or two other periods of time in my lifetime, which is over 5 decades. Right. You don't see real estate going down. And even when it does, it recovers. Right. And so I love that. It's one of the reasons I'm an investor in Rich's fund.
Oh, good.
And so, but even personally, now because I was in the mortgage business from a young age, I was always used to the residential side of things and not commercial. Now I do own some commercial property as well, but my comfort has always been in residential and not necessarily multifamily. So single family and all that. Right. How did you, when you decided to get into real estate, how did you decide? Because I think a lot of people do this, right? They come of an age where they're like, hey, I may want to be in real estate. And there's so many different options. Just that one decision is there's such a wide spectrum of things you can do. You can get into property management. You can get into residential or commercial or industrial or selling real estate or mortgage. I mean, there's all sorts of things that you can do. But narrowing that down into something that you have a passion for, like you had to have considered other things, right? Including residential.
Yeah, really good question. So for me, I knew my enjoyment was in building business. I knew it had to be a business activity I was going to create. I did spend some time considering if it was going to be a private equity real estate firm or I would just focus on building out my personal portfolio. And I called people. I reached out to friends. I have one friend I'm thinking of. He owns, 2,500 doors, personal, no investor capital, right? The guy's worth a lot of money. First person I called. Why didn't you start a business? Why did you do this yourself, right? And his advice to me was, don't do a business. Right. Do it yourself. Don't have the pain of investors. Don't have the pain of employees. Like, you can do this yourself, dude. And as he said it, and I appreciate him so much, I took that as, you know what? I wouldn't get the enjoyment that I need to show up every day if it was just about a real estate portfolio for me. Like, I like the idea of creating a vision and then trying to, doing everything in your power through every challenge and finding solutions to get it to that end goal. That's what I enjoy. So I knew that there had to be a business aspect to it. Now, why I picked multifamily as opposed to single family. For me, single family, there's two things that single family doesn't have that I wanted. One, how single family is valued is different than how multifamily is valued, right? Single family, you're typically getting a valuation based on a comp in the area, right? That's so right. If you've got your 3-bedroom home and there's a 3-bedroom home down the street that's sold in a certain time frame close to that, that's typically how you're going to get to what you're going to sell it for, right? Multifamily is all based on how good you are operating the business. It's all based on income and cap rates. And so I did like the idea that if I was better at operating, I could get a better value than the person next to me. So I like that component. The second component, when I started thinking about scaling, the idea of having to go out and negotiate 100 different, have 100 different negotiations to get 100 different loans on 100 different properties. That just seemed like a nightmare to me.
Yeah.
Where I was like, you know what? I could do one negotiation for one 100-unit apartment, one due diligence, one loan. So I think scale was a little bit, I saw a clear path to scale with multifamily. And then I think the third, and this might not make sense for some people, and it may sound egotistical, but I like doing things where the majority of people think it's too hard to do. Like there was something about multifamily that I thought, okay, most people do single family because it's accessible.
Yeah.
Most people do not start with multifamily, especially at this size. I kind of like that. Like it just seemed like a bigger challenge, higher barrier to entry. And there was something that I was kind of drawn towards with that.
I can totally relate to that. And by the way, I think that's pretty astute of you to have gone through that entire thought process to then figure out that that's where you wanted to be. I mean, that's and this is you were in your early 30s.
Yeah, I sold the brewery when I was 30. Was I 32? So this was 33. I started doing this.
So your early 30s, you're going through this entire thought process. I mean, that's highly unusual.
Yeah.
You know, you're an elite group, and just going through that thought process, let alone executing on it and being where you are today. But I can feel you as far as just doing things that others aren't doing. That's exactly why I started a tech company a couple of years ago. Not that I needed to do it.
Yeah. Not
that I needed to have the headache of going upstream when everybody's going downstream. Developing this thing, which today it's like I was super insightful as to what the future may hold, but when I started it, like it was really difficult, and I can't even tell you everybody I talked to, investors, friends, everybody, even though they knew like that's probably the future of real estate, and what it is, it's a tech platform that allows anybody to buy or sell their own home without using an agent, using technology. They all felt that, but every investor that I talked to, any mainstream investor, no, it's been tried before. No, it's been tried before. No, it's been tried before. Well, guess what? Look at what's happening with regulations right now. So I totally feel what you've gone through.
That's right.
Trying to drill down into some of the things I've seen you talk about over time. You're very big on the California market, right?
Yeah, when you're talking about going upriver.
Right.
I know that feeling.
And it's not the easiest place to have residential properties. It's not the most landlord friendly. I'm curious your experience over COVID with people maybe not making payments and having to keep them in properties and that sort of thing. So you picked, I think, 3 of your top 5 areas to buy property in are in California.
Correct.
Right?
On multifamily. Storage is different, but multifamily, yes.
But that's really what we're talking about. So California traditionally is not landlord friendly. And if you own property over COVID and you had somebody who really wanted to take advantage of all the opportunities they could be living in that property and you can't get them out for a year, 2 years, right? How did you deal with that?
So for us, like, when COVID first hit, we definitely went through this, time to hold cash and prepare. Like our expectation was that it was going to get bad. What we ended up experiencing was actually a totally different scenario. Thank God. And I think that's because of the location of our assets and the class of our assets. So we're typically on the higher end of rents, right? These are Class A apartments. That's typically a high credit, usually a higher income earner. And so when we went through COVID, did we have people that stopped paying? Of course.
Yeah.
Was it at the rate that we were expecting? Not even close. It didn't even get to a point where we struggled there was never a time where we went, oh my gosh, we can't pay our expenses and our debt. We didn't even come close to that. Now, that was not the experience for everyone. I have friends that operate huge portfolios in the Class B space and the Class C space. I had some, they lost everything because of it, right? So and then I think probably the third component is depending on where you were, maybe had a different experience. But I think what we really comes down to, what we saw during COVID is a lot of the maybe lower and kind of, let's call it low mid market jobs. Those are the ones that were significantly impacted.
Yep.
And that's typically who's renting a Class C or Class B. And so I think those operators from that got just a different experience.
Gotcha.
But that, the overall point though, California's, land, they're tenant friendly. They're not really landlord friendly. They're not really business friendly. Mm-hmm. Yeah, you're totally right. They can be a nightmare in theory. But what I've come to the realization and why I'm so hot on these markets is, I don't know if this is on purpose or if this is just what I see, but to give them the benefit of the doubt, it sounds like the politicians try to create policy where they're hoping for it to do good, but it always has a reverse outcome. And what that reverse outcome always does is makes it worse for the people that they're attempting to help.
Yeah,
and so,
I couldn't agree with you more.
And so that's what we see, right? Like the government looks at the tenants and they go, we need to focus on the tenant only. So they add more regulation, they add rent costs, they add all these factors that, one, disincentivize investors.
That's right.
I mean, less investors in. And two, it drives prices up. Like we have, for whatever reason, a lot of the policymakers have not kind of come to terms with the reality that when you make it more expensive to do business, that cost is passed down. And so it's inflationary over and over and over.
And unfortunately, because it's about the headline, it's about them. Honestly, it's not only about them trying to do good for people.
Right.
It's also about staying in office. Because when you're a career politician and you're getting paid to be there and you don't have any other skills, you've never built a business, you've never done any of those things, you got to stay in office.
That's right.
That's your life. And so it's about the headline.
Yeah.
And if we look at affordability today compared to, when I was in high school and taking odd jobs, it was $3.35 an hour.
Yeah.
But guess what? The price of gas was 85 cents a gallon.
That's right.
And so relatively, we were making less. So all this push for politicians, and we see, just locally here, I think it's North Hollywood, if I'm not mistaken, the minimum wage is $22 an hour. Now, I really never knew that, municipalities down to the city level set the minimum wage. I always thought that it was statewide, but it really isn't. But you look at the cost of things, and of course it gets passed on, or these people that have the entry-level jobs that need it, kids transitioning into the workforce or older people that are transitioning out, they're not going to have jobs. Right. They get replaced.
Right.
And we see it time and time again. Affordability gets worse, and then they even lose jobs. So it has a counterproductive effect. But yes, the headline is, we did it. We got $22 an hour for food workers. And it didn't do anything but make it more costly.
Yeah.
Because the business owners are just passing that along to consumer.
Yeah.
Guess who the consumers are? Those same people.
Yep.
They just have to work 3 hours to get the same thing they used to be able to work an hour for at a lower wage. So
that's right. So you ask yourself, if California is so pro-tenant, why are properties valued in California more expensive than anywhere? Why is rent higher than anywhere? Why does rent go up each year more than anyone? When we just went through this correction in multifamily last year, why are apartments in the Sunbelt states and Midwest having to hold reserves and not do distributions? Well, out here, they're still spitting off cash flow.
Yep.
Right? So, you just ask yourself, if California is so pro-tenant, why are they in the business of making all the landlords wealthy?
I don't even know that it's intentional. I think they just don't know any better.
Yeah.
So now that you're in politics, maybe you change everything, Mike.
Yeah, we'll see. We'll see.
But anyway, so let's talk a little bit about Commune, because it's your private equity firm. Mm-hmm. You've taken in outside capital. Mm-hmm. Do you continue to raise? Do you have enough money? How do you talk to your investors? How do you bring on new investors? Just curious how that works.
Good question. Do we have enough money? You got to be careful with that one, right? So just for context, we're managing about $315 million.
Okay.
We can never do a deal again, and we're in a good spot. And so, I think you can make the argument we don't need money. We have about 600 investors total. We do great projects. We have fun. The internal team from a day-to-day basis, it's great. But we do more than what we currently have. I think that's mainly driven by me being, I have an idea of where I want the company to go. When I find opportunity, I like going after it. So we're growing. We're bringing on additional capital. We have more projects today being developed at one point than we ever have in the history of the firm.
How many projects at one time?
So we have about 140 million under construction right now. And then we are slated for almost another 100 next year. So that's the amount of projects we have: 1, 2, 3, 4. We have 5 basically in construction or about to break ground on, and then a couple pre-construction.
So these are ground up, or,
everything
or are you acquiring and then rehabbing?
Everything for us is either ground up or adaptive reuse.
Okay.
So on our storage side, we do like big box retail that goes vacant. Your Walmarts, your Kmarts, Bed Bath & Beyonds. We keep the existing structure and we fill the inside with storage units. On the multifamily side, it's buy something, it's typically distressed or vacant, scrape it, and then go vertical.
Got it. And so you continue to raise capital then? Minimum investment of?
Depending on what we do, it's typically set around 100,000, and then we have a current offering where it's actually a little bit higher, about 250.
Okay. And then what are you looking to target for returns?
Depending on the portfolio. On the storage side right now, we're targeting about a 15% net IRR, so that lands at 18% average annual return. Okay. And then on one of our new multifamily deals, it's about a 21% average annual return. So that's a 17 net IRR.
Does that include some recapitalization and exit strategies as well?
Yeah. So like when we look at our return profile, right? And if you're looking at IRR, you look at when somebody invested with you, and the second they do, the clock starts ticking. And then you basically look at the frequency or the amount of money you put in their pocket, whether it's from cash flow, from a cash out refi, or an exit. And then when the whole thing's said and done, you have an equation that totals all the money in the pocket over a certain amount of time, and then you get to your return. Yeah. Average annual return is a little bit more simple to get to. Basically, what was the total gain? What was the time frame, and divide it by that time frame.
Sure.
Right. So if I get you, you invest $100,000 with me, 5 years, it's 200. We take the 100 divided by 5, you have 20% return.
That's right.
Or average return.
And but targeting a 10-year shelf life.
What we do, actually, it's a really good question that you asked that. And this is a new model that we're doing on the multifamily side. My outlook. Okay, so I'm hyper focused on this market, Ventura. You know Ventura because we're local, right? Ventura doesn't look like any other coastal community in our state, at least on the Southern California side, right? You think you've got Santa Barbara, Carpinteria, you get into Ventura, gap that, now you're at Malibu, and then you go Malibu all the way down to like your North County, Carlsbad, Encinitas.
Entirely different.
Entirely different. It looks like you went back in time in Ventura, right? Because of the 400 housing laws that were changed at the state level, starting in 17 to today, you don't really have the option to stop communities from adding development today. You were able to do that 5 years ago and before, can't do that anymore. And it kind of has made it so that Ventura finally can be brought up to where we currently are.
Yeah, you're absolutely right about that. I think that's also partially the reason why ADUs are a lot easier to do in California.
Well, that's what they did, right?
Because there's a housing shortage.
That's exactly right. So if we're like really going into the weeds, right? This is where we're at. There was nothing that forced cities to build, right? And then you come out of the financial crisis, and we didn't build well anyway just because of the distress from the economic times. And then, we start getting to like 15, 16, 17, the states going, we're not performing, right? We've got population growth and we're not seeing housing growth. Yep. And so the state started trying to figure out how to make it easier to build. It's not easy, but easier. And they tried to figure out ways to not allow cities to just say no. And that was what a lot of those housing laws were. One was, the ability to do ADUs. Two, the forcing of cities to put and get their housing element approved by the state, the implementation of the builder's remedy. There were a lot of things that came into play. All that to say, I think in the next 20 years, I think Ventura probably looks more like every other coastal community, right?
It's really interesting. Look, I know Ventura very well. It's not a big city.
No.
It's relatively small. Not a giant beach area, but the whole thing it's cooler, and the whole thing is, it's the weather-wise is just it's great. You get out of the heat of the valleys and so forth. Definitely more appealing than like an Oxnard or Channel Islands, which I would imagine is a lot more difficult to build in. You don't see a lot of multifamily in those areas.
Yeah, Oxnard is actually going through a pretty big growth boom. Oxnard's a very different market than Ventura, though.
Yeah.
You actually butt into a coastal aspect with Port Hueneme.
Yeah.
But even that, I don't know if that ever has the opportunity to do what we're talking about with Ventura.
Yeah, I agree with you. Without even knowing the details of what you look at, just knowing the geography of it, it seems a lot different.
So to really answer your question, because I have this view of where Ventura's going, I'm looking at it like this. I feel like right now it's like buying, beachfront property in Carlsbad in the 90s.
Yeah.
And if I would have done that then, I'd still own it today. You don't see those assets trade hands, very often. And because of that, I don't think I'm going to want to sell the assets we're building. So what do you do if investors don't want to hold for 20 years? We basically, target around year 5. My company usually buys investors out at that point.
Yeah.
We're going to target to do that. And so we do it at market value. There's no discount. If an investor wants to flip their money in 5 years and go find another deal, let's go.
Right.
For me, though, I'm going to want to hold this thing.
Are you getting their principal back anyway through your normal process?
Yeah, so that's what we attempt to do usually around year 4.
Yeah.
So usually if you're looking at a development deal for us, it's 2 years to build. Year 3, we usually get to a point where there's a dividend, not a big one. And then year 4 is where we target a cash out refi. As close to 100% as you can. You definitely want to get an investor to where it feels like they're playing with house money at that point.
That's right.
And then once most investors are either made whole or close to
become
being
very
whole,
patient.
they're like,
They become very patient.
let it go.
Yeah.
Let's go.
Yeah, that, and especially if you're paying a dividend after that. And
Right.
that there's another, cash out situation, another 5, 6, 7 years
Correct.
from that point. So it's a solid business plan. And again, going back to what we talked about, you have the underlying asset.
Yep.
And so it's not as speculative.
Yeah.
Ventura, I think, is a really great area. There's some tech there too.
Yeah. So that's if you ask me kind of what created this opportunity, right? You had the housing laws change from the state level. You had a lot of tech companies start popping up in Santa Barbara, Carpinteria, right? And whenever there's tech build, that's the youth that comes in.
That's right.
Right. So now you have an avatar of 24 to let's call 35. But even though they're making income from the tech world, you're not living in Santa Barbara. That is an affluent market.
That's right.
Right. So they went, Ventura's 15 minutes and housing is still affordable.
Yep.
And then with lockdowns, we saw just a wave of people come out of LA County into Ventura County. And all of a sudden it's created this, what I view the Ventura opportunity.
Yeah, I agree with you. And one of the biggest tech firms that was born there and still has a big presence is the Trade Desk.
Yeah, that's right. That's
so
right.
One of my good friends was their 9th employee, has since retired.
I was just talking to somebody who, I'm wondering if it's the same person.
It may be. He's in Thousand Oaks area.
I wonder if it's the same person.
It may be.
Epic. We'll talk about his name offline.
Yeah, for sure. So, but and most of these guys, the younger ones, especially came kind of later in the process, maybe even after they went public. They're like surfers too.
Yeah,
these
that's
tech guys, like there's some sort of a, offspring of people that are doing tech that also, or involved in the tech firm that also love the beach and surfing.
Yeah.
So, and that's a pretty big demand.
Yeah.
I mean, for a small community.
That's
so
right.
I love what you're doing with that.
That's right.
Yeah, I recognize the same thing.
Yeah, so that's what we're focused on. And then, this is kind of going into my business. This isn't necessarily on the investor side. But with businesses like mine, you make a lot more money when you sell something, right? When you sell and you really participate in your promote, that's where big money comes in. And so I am mindful of that, just with what our growth targets are for our business, kind of how to navigate that. Kind of our working frame right now is out of 3 projects that we do, we'll sell 1, hold 2.
Oh, okay.
So I think that's going to be probably the strategy moving forward for the near future.
Yeah, that makes sense. So you've done this, we talked a little bit earlier about the blueprint, and you've done a fantastic job of going from that free spirit, rebel, skateboarder, Mikey, to, entrepreneur and businessman Mikey, and, even civil servant Mikey. So if you were going to be talking to, and you probably do this, but young people that are in sports, whether it's skateboarding or something else, and thinking about bridging that gap and thinking about it while they still are popular, still, earning whatever that living is while they're doing it, but knowing that at some point that's going to expire. What would you tell them the blueprint is?
Yeah, I would say probably the biggest challenge.
I'd say if you're considering joining the AmeriFund team, it's a really good idea.
We as processors at AmeriFund Home Loans support the loan officers in every aspect of the loan once it comes into processing because we want them out there marketing themselves and originating more loans and supporting more borrowers.
Competitive commission plans are a given, and powerful technology is expected, but what truly sets us apart is our culture. We've built a solid support system for our loan officers. If you're interested in joining the AmeriFund team, go to amerifund.com/careers.
What would you tell them the blueprint is?
Yeah, I would say probably the biggest challenge whenever you're trying to get in early with athletes to prepare is it naturally comes off as defensive when you come into somebody who's on the rise, right? They're moving up in their career and you're like, hey, you need to start planning for your future. That naturally feels like a defense move. And so I've had to learn how to articulate it in a way where I'm presenting an offensive move, not a defensive move at that age where they don't want to talk defense, right? Usually what happens is when an athlete has the realization that their career is either ending or it's heading downward, then all of a sudden they start planning for, what happens next. You're not leaving yourself with that much kind of room to really take advantage of what you built. So you got to get in early. How you speak it is everything. And basically what I say is you have a great opportunity to make something much larger than this, right? Paint out the vision, right? This is what I see in you. This is what it's going to mean. This is going to be your life. And if we're going to do it, let's start making strategic moves today. And what that ends up going into depends. Some athletes are more entrepreneurial, some aren't. And for the ones that aren't, it's a different strategy. They need to be much more savvy with what they're investing in so that, when the career ends, they've actually built a machine that just basically spits off cash. The entrepreneurial ones, you're more setting them to start finding people or opportunities for them to build upon what they have.
Yeah.
But that's the minority. The more athletes actually aren't built that way, believe it or not.
I think you're right. No, that's probably very true. I try to think about current athletes with social media and the ability to build a presence and a following online, which I think you probably came just after that, right? Your skateboarding career didn't give you a following.
I got the tail end of it.
Okay.
Yeah.
So maybe that was an initial lift because you have a really devoted following now.
Yeah, it was a lift. That's exactly right. Yeah.
But they've got the ability while they're going through this to really parlay that and build it more and then turn that into something that feeds whatever they do in the next phase, right? And so, just in following you for a short period of time, I see that you do a lot of financial advice. Most of your feed is that. And it gets a lot of traction, a lot of people talking. So you're saying the right things and you're educating people and you're using that platform for that purpose. So if somebody follows you, if they, after this, we'll give your handles and all that. But if somebody follows you and something resonates with them, what should they do to act on that? Is there something that you would suggest if they see something, they say, you know what, that's me. What you just said, that's me. What could I do to actually take advantage of that? What are some practical steps to take advantage of taking that, hey, I have a following, and I've got people that are interested in what I'm doing. How do you bridge from everybody's following me because of, let's say, skateboarding, but now I want to do something else?
Yeah, that was one of the hardest things I've ever done in my whole life. Transitioning
from being known as, Mikey Taylor, the skateboarder, to Mikey Taylor, the businessman.
Yeah, that's a good question. That is truthfully it really is one of the hardest things I've ever done. And it's something I actually don't speak much about. On how to do that. It's actually a really good question. This is what I did. It ended up working. Basically, when I was trying to figure out kind of what was next for me, right? I figured it out. I want to build this company. The challenge I had is at that point, all of my followers were following me pretty much because I was a pro skateboarder. And I was a successful pro skateboarder. I wasn't like a random guy that nobody knew. I almost became as big as I could become in that industry. So it was like,
you have your own shoes.
14 years being solidified as that, I had a big hurdle to get past, right? What I attempted to do was transition my audience in a way that felt like I didn't just do a full 180 on them. I tried to make it feel like they were walking along this process with me. And so what that looked like, in the beginning, I had between a 6 and 9 month delay on where my life actually was and what people were seeing on social media, right? So like, for example, I had started the company and we were raising money for the first project and we closed on the first project. That was currently happening. My social media was me just doing posts that sounded like I was being more motivational or entrepreneurial. For example, I'd put a photo up of my kids, right? Like me and my kids. And the caption would be, I work really hard because I have them in mind. And I'm entering the stage where I want to be really financially focused. That was it, right? Yeah. And then I put in like a couple skate clips. And then it'd just be another drip of like something like I was trending towards wanting to start a new company. And I would say it took me almost 2 years of getting to the point where my real life matched social. It was a slow freaking process. That's going to be dependent on how big your audience is. Like I think when I transitioned, I probably had 450,000 followers.
Which is a lot.
So yeah, so it felt like I had a kind of a bigger ship to move. The internal struggle, so if you're somebody who's going to have to reinvent themselves and you have an audience, what you're going to find is you're going to go through the emotional challenge of having to do something different, and you're going to have an audience that's telling you you're wrong and to go back to where you used to be, which is detrimental. Like you've got to figure out a discipline that keeps you focused on where you're headed and doesn't allow you to go back to where you were, right? Yeah. For me, what I would do, I would remind myself every freaking day what I was doing, right? I'd wake up and go, I'm building a private equity firm. I will build this to $1 billion. We're going to do this. We're going to do this. I had to remind myself every day, right? And then on social, when I would get people that would tell me, I shouldn't be doing this, you're not qualified to do this, go back to being a pro skateboarder, right? I would constantly remind myself, they see me as a skater now, in the future they won't.
Right.
And so that's what I did, but I'm not going to tell you it wasn't hard.
Yeah.
It was brutal.
Did you lose a following or?
Oh yeah. Yeah. I think during that 2 years, I probably lost 150,000 followers.
A lot.
Yeah.
Wow.
Yeah. And then it rebounds, right? It's like I've got maybe
with
collectively
the right followers.
Yeah, and this is the blessing of it, right?
Yeah.
And this lesson actually can be applied in almost all facets of life. When you go through a challenge, it sucks, right? It hurts when you're in the fire. But what you experience on the other end becomes a whole new you, right? Yeah. Like you'll look back and go, dang, like I can't believe who I am today. I'm so much stronger and more resilient and my life is in a better place. What that looked like for me, I had followers that followed me for skateboarding, right?
Yep.
I lost followers because they didn't want to see me be anything else. All good. Like, that's your right and I'm here for it. But what was cool is I had followers that were skaters. They were like, what are you doing? And they started going through the transition with me, right? And fast forward to today, a lot of those actually became investors of mine. A lot of them, keep me up to date on things they're doing in the business world. That's been huge, right? Then probably the coolest experience is I get people that follow me that send me messages today that say, I followed you as a skater. I left or I unfollowed you because I hated you. Legitimately drove me crazy. Like I would be like, gosh, Mike, just shut up and skate. And I unfollowed you. And then 2 years went by, 3 years went by, and I saw a piece. I was like, huh. And then because I watched it, it showed me another piece. And then I ended up following you again. And I'm at a stage in life with what you're saying is very relevant. And you're one of my favorite people to follow.
That's
right?
Awesome.
That is awesome. And then now today, like I have 4x the amount of followers today than I had when I was a pro skateboarder.
Yep.
And so now I have an audience that's just riding with me, doing what I'm doing with life, and we're riding the cycle together.
I can totally see your early followers doing that because I pulled up some old YouTube videos of you during the skateboard days, and you're just like some kid just fooling around all the time. And so they
right.
knew you as that.
Yep.
And they're like, you don't have the authority to talk on what you
Yep.
dislike.
Yep.
You know,
That's
and
right.
I don't like the term followers. Like this
It is
really,
what it
it's
is,
an
though.
audience. It's
Yeah,
an
but
audience.
that's right.
But it reminds me of I was listening to Ed Milet, his podcast the other day, and I'm going to try. I don't want to butcher this, but I'm trying to remember this. There were 5 stages, he said, to building the right audience, and the first one, he said, really sucks, and it's being invisible. And so when you start out, and you had, like you said, you already had a bit of a following, you caught the tail end of it, and it gave you lift. But a lot of people, they don't have that, and so you might be posting, you might get like the 200 people to view it or whatever, and you think you're just invisible, and it sucks, and you're like, why am I doing this? And you just got to get through it. And then the second stage is the haters. People are just hating on you and saying things that are mean, and you just like want to crawl in a corner and that sort of thing. And he said the third stage is, what was it? I'm trying to remember here. This third stage are those that are criticizing you. And the difference between hating and criticizing is they hit home. That they're criticizing you, and it causes you to think about what they're saying and go, shit, maybe they're right. Maybe that is me. What? God, maybe I'm not capable of doing this, and but if you turn that around and you turn it into, okay, this is something I need to work on, then you can get through to the fourth stage. And the fourth stage are the users. So now you've got, this popularity, and you've got an audience, and you're doing these things, and now people just want to latch onto you and use you for whatever it can give them their lift, right? And he said what you live for is the fifth stage. And I may not be getting these exact, but the intent is
whatever.
But those are the
heard
collaborators.
I love this. Say that again.
The fifth stage are the collaborators. Right. And so you get to that point, and you're like, you have this whole new group of people that want you to win, and they want to collaborate with you, and they want to see you win, and they advise you. Don't expect anything in return. He says that's your tribe. When you get to that fifth level, all the other 4 are worth it, and it's not like those disappear. You're still going to have elements of all of them.
Right.
But when you get to that fifth stage, so let's just say it's like somebody you grew up with who followed the same path, and now they're a businessman, they're successful. That's your tribe because they can relate. They don't want to hurt you. They want to help you. They want to lift you up. And so I was listening to that the other day, and I thought, man, for most people, they can't make it those 5 stages.
Right.
They just don't have the inner strength to go through it, and the resilience and the self-confidence, and it just breaks them down.
That's good. That's really good.
But if you break it, if you make it through, this is something. It sounds like you're there, Mike.
Yeah, I'm there. Yeah. I'm exactly that. Yeah. And look, still get my fair share of hate. Still get my fair share of criticism. It just doesn't hit the same.
Right.
You get to a point where it just doesn't bother you. I mean, I get some comments. I think about them, but the days of somebody taking me off my path, those days are gone.
Yeah. And probably, I'm just guessing now that as a council member, in the public eye, that's probably where most of that comes from. And it's not the online stuff like, okay, you read it, you don't read it, whatever it is, but it's right there in your face and live. Because I had seen something about, there were some people complaining about surveillance and,
the
traffic light stuff.
The political game is a different type of beast.
Different animal.
Yeah, because, no matter what, like you will have half the people hate you no matter what. Like, it's just how our political structures is operating, That one's tough. And then usually it has nothing to do with what you did. It's usually going straight at the character, the individual.
Yep.
And they say reckless stuff. Reckless. It's one thing somebody goes, you're a skater. What do you know about money? Right? Okay, fine. Right. But like when somebody's like, you're the biggest piece of shit. You're a racist. What all this stuff? You're like, holy smokes! What is this? Why am I doing this again?
And you have to be so your inner self has to be so confident, otherwise it just breaks you down.
Yeah, you got to have thick skin.
Yeah.
You got to be confident, and you got to do it for the right reason.
You said something a moment ago I just want to drill into because I think this is significant and what people really need to think about, especially if they're struggling and they are trying to build something of themselves and build an audience and that sort of thing. And that is, you said 50% of people aren't going to like what you do.
Mm-hmm. Well, that's the goal. That's what you want to get to.
Yeah. Isn't that interesting? Because at the end of the day, and we see this in politics, right? It really is about a 50-50 split, the way people think on a very general level.
Well, yeah, it's actually interesting that you brought that up, because that's actually not how I meant it, but you're dead right. In politics, you usually have two parties, right? And if you're on one side of the party, the other side of the party doesn't like you. That's usually what it is. Yeah. But when you're talking about building an audience, this is what you have to stay clear of, and it goes against what's going to feel right inside, right? What feels right inside is like, have people like you. And if people don't like you, you're doing something wrong. That's natural for us, right? At least if you're like a solid person. Right. But if you don't ever create something that people love, you will never get the hate with it, right? The hate is actually a good example that people love you as well. And so if you're looking at an audience, right, and you don't get any hate.
Are you a tech investor looking to shape the future of real estate? HomePie is the #1 for sale by owner marketplace, and we are revolutionizing the way homes are bought and sold. I'd love to hear from you. Just email invest@homepie.com and let's chat. Now back to the show.
Your audience isn't worth anything. They're never going to act with you. They're never going to ride with you. They follow you the same way they follow anyone else that they don't care about, right? But when you think about those that have a hot audience, right? This is an audience that will freaking ride with you. They also have a hot hater audience. And here's the interesting part. The hater audience follows that person and knows more about that person than the person that has a lukewarm audience, right? So you can make the case that even this guy's haters like him more than your lukewarm audience. And so if your goal is trying to stay clear of pushback, you're not doing anything that's making an impact. Like, that is a dangerous place to be. You're in comfort zone at that point. You're stagnant. Do not be there. Do not be. That is death. Don't do that.
I love that, man. You nailed it. That is absolutely right. And so for those of you that are listening to this and you find yourself in that state where you want to say things, but you're afraid of the pushback, if you really believe in it and you have a conviction, believe me, there are 50% of people that believe the same thing but aren't willing to say it. Yeah. And so just say it and have conviction, and just know you will get blowback, but eventually, like Mikey just said, you also get your defenders. 50% of people are going to defend you.
That's right. And I would say probably that how you see that, like, if we're being like really specific, how you see that played out today. There's a lot of, let's call them influencers or people with an audience, that they say things based on how it's going to be perceived by the audience, right? So they'll go, okay, if I say this, will they like it, right? And if they like it, okay, good. That's not very powerful, right? The real people that create an audience that actually like change the culture or move the needle, they're the ones that say what they think is right, and they throw it out there and go, I don't know what people are going to say. Yeah. And they may get blowback. That's actually what you're trying to get to. It's just not easy to be there. It goes against the internal. Am I saying something that's offending somebody? Am I not being nice? It's challenging.
For sure. I think a lot of people can relate to that.
Yeah.
So awesome, Mikey, and Mike, both of you. Thanks for joining me today, man. It was really an honor, and I really enjoyed the conversation. If people want to reach you, they want to be part of your audience, or even if they want to be, part of your private equity firm and invest with you, how can they reach you?
Okay, so for me, it's just Mikey Taylor on all the social media handles. So you'll find me there. Our company's called Commune Capital. Find us on social same way. Our website is communecapital.com. And then the last plug I'm going to give you, and we're going to have to get you scheduled, I have a podcast called Life with Mikey. It's on Apple, Spotify, and YouTube. So if you want to dive into what I'm doing on a daily basis, you can find me there. And then if you're looking to invest, on our website, you can find a place to put your information in. If you're following me on Instagram, you could just DM me the word invest, and it's going to trigger a software. Someone from my team will call you within 48 hours. If they don't, send me a message. That'll be an opportunity for us to clean it up a little bit.
Right on.
And then we'll see if what I'm doing lines up.
Awesome. Fantastic, man. Thank you for joining me today. And until next time, we'll see you.